let's talk about the most important thing. And I think this is like epically everyone talks about every month, and that is the inflation. Inflation. It's
Yes.
going up, it's going up, it's going up, it's costing us money. What is your take on inflation?
And inflation, what we've seen, I think last year in its own, there's been sort of an 8%
Mm.
inflation. It is expected to, I think, pull back a bit, but wages haven't caught up as quickly.
Yes.
And so we are seeing things that are more expensive. However, we're not seeing people spend on, apart from traveling, everyone's traveling.
Yes.
But we're not like the cars. If you look at cars, right?
Mm.
At one point we had this problem with waiting for cars and pools and everything else.
Mm.
Everyone's done that.
Yes.
They've all done that. And they go, what am I going to spend? I'm going to spend on travel and
Definitely.
a lot of people start to spend on property. So inflation, I've found in general that people get to a point where there's a level of discomfort at the beginning,
Mm.
and then it gets to this point of a new normality about what the rates are. And I find that there's this sort of lag in terms of what the true impact of inflation is. I mean, we sort of see broccoli at some ridiculous price, $10 a head
Yes.
or something like that. And at first it is a big shock. I find we spend less on the unnecessary
Yeah,
things as well.
definitely.
So I feel that it sort of impacts on our buying routine
Yes.
and the way that and what we're buying and how we're buying and spending
Yes.
on
Yes.
things.
Yes. The spending
However, the
pattern
consumer,
changes basically.
yeah, the spending pattern, that's the word. That's the thing that I'm looking at. And I'm seeing particularly inflation in Australia. I'm not talking about sort of other countries and things like that,
Mm.
where it is making things more expensive,
Yes.
but we tend to almost settle down to a point where you go, this is the new it.
This is the new norm.
I've just got to,
Yes.
yeah.
Yes.
Yeah. What do you think?
While the inflation is slightly coming off, we saw the new numbers coming in at 7% versus 8%, unemployment going up. One thing to
Yeah.
note in relation to inflation is that Australian currency is still cheaper for people who are dealing in US dollars, right? And so when you look at the full story and the full picture, right? You talk about net migrations who have dealt in Australian dollar in US dollars. You're talking about people coming from Singapore, Hong Kong, India. Their currencies are a lot stronger, compared to where they were
Yes.
before, right? And so their ultimate purchasing power is a lot stronger than a local Australian, right? And so you're right in saying that while the discretionary spending is in a crunch mode and people change their spending pattern, a lot of the inflationary impacts actually show up 8 to 12 months down the track, because you can only kill yourself so much. You stop having that extra coffee.
That is true.
Yeah, you can
Yes.
stop eating out, but it's not in infinity, right? And so there is a trigger.
Yes.
And usually that trigger happens past 9 months time, past 12 months time, where people are like, yeah, this is not happening, this is ridiculous, right? And so that's where the real stress comes into play. I think people trying to look for stress right now in the property market due to inflation, and they're not going to see that impact, the true impact of inflation or the rate rises right now. And that,
And how do you, I mean, are you seeing that impacting, how are we seeing that impacting on property prices in that regard?
look, ultimately, when you think about inflation, right, there is a few things that comes together at the same time as inflation, okay? So you have to look at the equity markets at the same time. You have to look at the affordable housing at the same time when you're talking about inflation. You can't just talk about inflation and not talk about these things, right? And so when you see people who are paying more money in rental because the inflation is going up, because the landlord or the owner of the investment property is charging you more rent, that's playing its inflation. That's the impacts of them increasing the interest rates, or feeling the burn and passing that burn down to the renters, right? On the other end, if you think about the financial markets and the equity markets, where the market is going, this the volatility, the first thing that people think about killing that volatility is buying into things that can absorb inflation. Okay. And so those things
Yeah.
are long-term treasury bonds, gold, like actual gold,
Mm.
or property, right? And so while people are not confident on long-term bonds because the return on these are quite significantly lower,
Mm.
no one is going to go
Mm.
out and mine gold or put all their portfolio in gold. It used to happen before. The property becomes a natural choice, and so every time you would see financial markets taking a dip, or equities market taking a dip, people will jump into property. You would see superannuation. It's trending right now. Why is that? That is because of that reason. People are like, well, I've just lost $4,000 in super, or $5,000, or $10,000 in super. So naturally, people think, how do I
Yeah.
save my investment? I put it in property. Okay. And so if you look at the
Mm.
holistic picture and you combine all of these together, you realize that the rental pressures would still keep pushing people towards buying. The financial pressures of not getting the returns on the investor side would still keep pushing people in buying that property,
Mm.
right? And so that cycle never ends. Naturally, everything points down to inflation proof or inflation absorbing investments. And that's what it comes down to.
And are you then seeing then this roll into, because you've got people who are moving away from these investments where they might have not seen returns and they're going to be looking at property? Like, where are we seeing the banks in all of this, in their lending policy? Are they providing? We've got both ends of the tightening lending policy. You're not
Yeah.
being able to borrow as much.